So guys, this is 4:42 a.m. in the morning and I'm up and ready to mark my charts because I love to come and show up in the market early before activities begin. So what I want to do is mark my chart and prepare myself and plan myself for the day and stick to my set of rules because every day you can add some tweaks to your set of rules, depends on your buyers in the market. So what I want to do right now is mark my charts and then let me show you how I do it, because this is actually the continuation of the first video I posted about how I mark my charts. So I couldn't really do it that day because the day already went past, so I couldn't. But this particular one, this is a new day, a fresh day with many new opportunities and fresh chart. So let's dive into it. So what I do when I want to mark my chart is I first go straight to my 15-minute time frame. On my 15-minute time frame, I want to turn on my session breaks on TradingView. That's if you use TradingView to analyze. I will turn on my session breaks. When I turn on my session breaks, you're going to see these lines on the screen. There are lines on the screen here. Yep. There are lines on the screen. All these vertical lines on the screen here, those are session breaks. They help you determine the close of a day and the open of a new day. I don't know if you understand me, but they help you determine the close of the day and the open of a new day. So you want to have it on your chart so you know the trading range of yesterday and how likely price could cover the trading range of today. So what I want to do is I want to mark the highest points in this particular trading range and the lowest point in this particular trading range. Because if you look at down, it's Tuesday, June 11th, and today is Wednesday, so we are still in Tuesday. We want to mark our chart from Tuesday, sorry. So let's start it. First thing I do is I pick my horizontal tool. I go inside of this whole trading range, which is we have this trading range from here to here, which is our Tuesday trading range. That was previous day trading range. This was price action of yesterday. So what we want to do today is we want to mark out the high. This is the highest point which price got to from this point to here. So this is the highest point. So the candlestick which wick or body turned to be the highest point is where we're going to target and place our horizontal line there, just right there. And then we can go as far as naming it. Normally I have this rule I follow. I name it recent daily low or recent daily high, depends. So I abbreviate them RDH, RDL. So this is it, recent daily high right there. And then we go inside of same yesterday's trading range. We also want to mark the lowest point which price got to, which is this point down here. So we also want to mark this recent daily low, which is RDL, recent daily low. So with that being said, you can now see the range in which price is currently today. So today we might be expecting price to push up, to push down. We don't know yet, but we are just planning ahead of time. So what you want to do next is you also want to pick the open. Let me zoom it a little bit. you want to pick the open of this particular trading range. So I'll have to take out this rectangle. So if you look at your session break line here, you're going to see that we have an up candle before a down candle, which crossed into the next day. So what we want to do is we want to look at the body of that candle, the closure of the body of the candle before the session break. So the closure of the body of the candle is this bullish candle here. Let me highlight it a little for you to see. It's this particular bullish candlestick here. This is raw price action, guys. So you see that particular candlestick, you want to bring in your horizontal line and mark it just at the tip right there. And then we go as far as naming it recent daily open. This was where price opened on our recent daily. This particular point here, it was where price opened on our recent daily. So what we want to do is rename it to RD. Oh my goodness, my battery is low. Rename it to recent daily open. That's it. So recent daily open. The next thing we want to do is we also want to mark the close of the particular trading day. So this area, this is our session break, remember? So our session break here, we have this point where there was a crossover. So the crossover here, we have a very tight scenario here whereby the candlestick that closed before the line, the last candlestick that closed before the line, is also a bullish candlestick. So we want to bring our horizontal line right there and place on the close, the body close of that particular candlestick. So that's it right there. We place it there. You don't need to keep it too accurate though, but it should be for some reason. So I will name that recent daily close. So I cannot go as far as locking everything on my chart. I would lock it all on my chart. So this is just one scenario for today. So because I will show you a little example now of what happened on our daily time frame yesterday. So in this kind of a scenario, what candlestick do you think is happening formed on our daily time frame? So guys, after you've marked your chart like this, you now want to use just using the lower time frame, this 15-minute time frame. You can use it and removing the whole noise in the market, because normally they say 15-minute time frame, 5-minute time frame have so much noise. I don't think they have so much noise though, because they have a lot to offer in price action as general. So what I want to do on my chart right now is I want to picture the kind of candlestick that formed on my daily even before I'm going there. So in this kind of a scenario, the candlestick that formed on our daily time frame, let's say, should be this kind of a candlestick, because it's gonna be. Let's just watch first of all, because if we have this recent daily open here and price got in and pushed up to the recent daily high, creating this price action on the 15-minute time frame, and now price is currently Let me take off something. And now price is currently at this bottom here. And now price is currently in this current day we are in, which is Wednesday here. So the candlestick that formed on our daily time frame, which candlestick did you think formed then? Let's find out on this lower time frame before we go there. So to me, candlestick that formed on our higher time frame is this place here serves as a body. You understand? Because if the recent daily opened here and closed here, which means this should be the body of the candlestick on the daily, right? It should be the body of the candlestick. So this for price to reject off this zone to this point, which means we should have a candlestick wick. It should be like a candlestick wick. This should be like a wick here. And then let me take on this a little. Okay. So it's not quite a hammerhead because we still have this rejection, which price rejected from the recent daily high to the recent daily low, which is this. So you see it now. This was price action of yesterday. So this is the candlestick that is currently on our higher time frame. I think I'll need to take a screenshot of this. I think I'll need to take a screenshot of this. Yeah, I'm gonna do that. Okay. So we'll compare and contrast it. So now, having the idea that this is a candlestick that formed on our daily. So what do you think price could do today? Looking at price on your lower time frame now, because we are working with the daily bias right now. This is our previous daily candlestick. So what do you think price is likely to do today? Where our liquidity, where those liquidities lie in the market? You understand? Because I like liquidity. I love the concept of liquidity because it's liquidity that drives price. So where are the fair value gaps that actually could hold in the market right now? I don't have any idea yet, but what I want to do is I want to mark every point that I think can reverse price. So what I'll start by doing first is, but right now on our daily time frame is totally bearish. Seeing something like this is giving you a bearish mindset. So what I want to do is price action, uh, all the price action printed yesterday. I want to go by. This is a low. This is a high. 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 So the price was kind of trending downwards. Now it pulled back up. So we have this point here because there is a high probability that when price gets to this point up here, it's likely if price should come to this point up here today, it's likely to reverse back down. But uh, but we don't know. So I just want to mark every zone, every high and low. So you see this particular point here, you can also mark it because it's anything above our recent daily close is kind of high probability to sell this market down because let's say today could print, the candlestick today could print because it would definitely open from the close of yesterday. So it could print like this or more. So you want to be in this trade, right? Oh, sorry. Oh, sorry. So you want to be in this trade. You don't want to miss out anything. So let's say you want to be in this trade, even if it happens to be an engulfing candlestick today that printed. So we want to be in this trade. So I'll be expecting something like if price is to move towards any of these liquidity zones from here to here and close below here today. So we would see something like this. That point of view, which, sorry, the POR, it's POR. So price could come and do something there like this to sweep out this high here. To sweep out this high which price created here. So it could come do something like this and keep trending downwards. Or it could from this point where it is right now and keep trending downwards because there are sell side liquidities lying here. And we are already in the downtrend. So price could do anything, it could surprise us, we don't even know. But so imagine you could catch price action. You could catch price from a very nice point like from here. Imagine you could catch price from this point down to this point. High probability trade. Or you could catch price from this point here. From this point here to this other point. That's massive. That's like 1 to 4 weeks to reward. Whenever it changes to point of interest. So you see how easy it is to separate the noise in the market by just using only the 15-minute time frame. Only just the 15-minute time frame. Now you see what price. Let's see what price does today. If we could find any trade at this point or at this other point, what we just want to see is let price come and respect these points where price, these highs where stop orders are lying above. So we could now find an entry and continue the trend. Because look at on our daily time frame, this is what printed. So the next thing here is, let me take this off. Let me take this off. So let's go to our daily time frame and see what we have here. Alright guys, so with that being said, this is what we have on our daily time frame. Let me take this particular candle off. So you would compare and contrast using only the 15-minute time frame for analysis. It has already given us a bias on our daily time frame. It has already given us a sell bias on the daily time frame. So let's head to our daily time frame and see what happens there. Let me zoom it a little so we are accurate. This is a candlestick that printed on our daily time frame. This was the candlestick that printed on our daily time frame. This candlestick right here. Now you see the wick from this point to this point, and you see this point here, and then this is the, you see the wick right there. See the body. So much. So you see it. Look at it open here. We'll put a picket just straight up to this point here. That's the open. And this is the close of this particular candlestick that printed here up to this point. And this is the low of it here. And this is the high of it here. So we are bearish on our daily time frame. So even if we want to buy today, we could buy when price takes sell side liquidity around this whole area here. Or we could sell when price comes back up for some more buy liquidity to sell, to continue the sell. So that is it, guys. That's how I mark my charts. Let's go back to the 15-minute time frame. So this is gonna be it for now, guys. So the last part I was talking about was if we could get a break out of this recent daily low, which means we could have something like this. Price could break out. No, sorry, not that. Price could break out here, come back to retest and drop. It could break out and come back here and drop. So this is how I picture today. So that we have a reversal from here. But I love going with confirmations. So it's either we have a reversal when price sweeps the liquidity here, or we have a reversal when price sweeps this up buy side, or a reversal when it goes higher to sweep this buy side. So bringing in your Fibonacci into this now from this recent high here to this low, you're not going to see the points of higher interest where price could really give us some nice setups from. So we have this 6.1 retracement level here. Price could really give us a come here or here, or maybe a continuation of the whole sell. Like you're already seeing an aggressive sell coming in here. So anything could still happen because we have a sell side LQ. That's liquidity down here. So we have a sell side liquidity here. I'm just gonna put that liquidity because all the people who bought late are going to be stopped out. I think so. So you now see how the chart is. So when you see so much lines on my chart, this is what I'm thinking. This is my perspective about price. This is my view on price action for the day. So it's not like there's any magic or anything. If you try this and it works for you, fine. If you have your own system, fine. But even if you don't understand this video quite well, you can still watch it over and over because I think that I didn't do too well explaining the video and stuff. So maybe, let's say maybe on my third analysis, I will keep doing it too until consistency makes perfect. Until I become very perfect and straightforward with all the information I want to fill you with. So that's it, guys. If you like this video, you can give me a thumbs up, or you comment, or you share the video, guys. So that's gonna be it for today. Thank you.